Hi everyone, I'm Debbie, an Associate Advisor here at Wealthmed. I'm joined by Doug, our in-house property specialist who heads up our property team. We wanted to touch base with you off the back of recent rate rises. Last Tuesday, the Reserve Bank raised rates for the third consecutive month by 0.5 basis points, taking the official cash rate to 1.85%. This move, intended to slow rising inflation, comes as Australian inflation rises to 6.1%. So what does this mean for property? Should I wait before I buy? Doug, tell me, what does that mean to the local property market?
Look, it's a really interesting question right now, and a question that a lot of our clients are asking us. Now, it's interesting to note that the property market has dropped a little bit by 2.4% over the last quarter. So that's the first drop in almost 3 years, which is quite significant. Now, you need to compare that also with the increase of prices over 21% over the last 12 months. So even though we have dropped a little bit, overall, the Sunshine Coast as a region is still performing quite well. I think it's interesting to note that the median house price in the region is still $1 million.
Wow, that's really interesting. So what does that mean for property investors?
I think the biggest thing it means for property investors is they need to understand that when they're hearing the doom and gloom stories across the news, TV, radio, print, magazines, whatever it might be, that the statistics they're seeing are not related to just the Sunshine Coast. They're taking a broad average of Australia in general, and particularly there's a big focus on the Sydney and Melbourne property prices. So when we dig deeper into the Sunshine Coast as an individual market, we see that it's still a really good performer. So one of the biggest challenges that the region is facing at the moment is being able to find a rental property. It's interesting to note that almost 4,000 rental properties have returned as owner-occupied houses. So there's a big strain on the rental market at the moment, and you may have seen that yourself. You may have seen that with the increase of rental prices. So one heartbreaking outcome of this pressure on the rental market is that there's estimated to be 14,000 people experiencing homelessness on the Sunshine Coast region. So you can see that there's still such a massive push to get into rental properties. Until this is relieved, the rental prices are going to continue to increase.
So that is a really heartbreaking outcome of this, and obviously there's a big demand for rental properties. So what does that mean for property more broadly?
So more broadly speaking, we still have such an amazing amount of population growth to occur on the Sunshine Coast, all the way leading up to the Olympic Games in 2032. So that's people coming from interstate, it's even coming from people from Brisbane, the city itself, and people coming from overseas as well, international migration. So interestingly, the ABC reported that as a region, the Sunshine Coast needed to build a brand new suburb each year and every year to meet the quantum of people who are turning up to the Sunshine Coast, which is absolutely amazing. In addition to that, the Sunshine Coast as a region also has the most infrastructure investment per capita. That's between both public and private of any of the 10 largest urban areas. So what this means is that the economy performance here on the Sunshine Coast is going to be able to weather the storms quite well for a long time to come.
Wow, so despite the rising interest rates, there still seems to be a lot of opportunity in the market. So what should investors be looking for in a good property?
Awesome question. The big three that we talk about at Wealthmed is cash flow, capital gains, and risk. So your cash flow is so important. When you're going through a time like this, you want to make sure that the property is affordable, both in the short to medium term and to the long term. And cash flow will tell you how much the property will cost or earn you during whatever interest rate that we've got. The second thing is your capital gains. Property over the long term, and we have a long-term strategy when it comes to property. Property performs well over the long term. So we want to hold this property for as long as possible, ideally 10 years plus. We're not looking to flip a property over 2 years. We're looking to hold it and enjoy those capital gains that come from experiencing the time in the market rather than trying to time the market. Very key there. And third of all, risk. Not all properties are created equal. There's lots of different areas you can invest in. There's lots of Australia you could buy. Right now, we're really excited about the Sunshine Coast and about Southeast Queensland in general. Brisbane is a great market too. And particularly with what's happening with the infrastructure being built here, the population growth, the rental demand, the future of the Olympic Games and the new roads that are being built, the expansion to the airport, the expansion to our university. It's a pretty exciting time to still get into the game. So one thing that's mentioned at the moment is that the local market is slowing down. The key to being successful during this time is to make sure that the property that you're putting forward is a highly desirable property, that it's got a bit extra to it. It's a nicer internal layout, nicer inclusions, it's a bit bigger, it's done really well. So even in a slow market, highly desirable houses still do really well and often defy the sale expectation prices.
So if you're interested to learn more about what your property investment options are, reach out to your financial planner to book a quick chat. Our property team are here to help you realise your goals. Doug, thank you so much for shedding some light on the topic and sharing your expertise with us today.